Expectation. These could be the best performing artificial intelligence stocks through 2030. Central issues. A. Simulated intelligence is a fresher industry. However, a few organizations have previously secured themselves as pioneers. B. A portion of these stocks have previously taken off. However, future development matters more. C. Applying the stake proportion to these potential blue-chip stocks tracks down the best arrangements. First, thank you so much for tuning into today's video. If you found the content helpful and insightful, don't forget to hit that subscribe button and turn on the notification bell so you never miss out on our latest finance tips and insights. Your support means the world to us, and we're thrilled to have you as part of the Finance Savvy community. By subscribing, you not only stay updated with our upcoming videos, but also contribute to the growth of our channel. If you have any questions, comments, or suggestions for future topics, feel free to drop them in the comment section below. We love hearing from our viewers. Thanks again for being with us. Stay financially savvy, and we look forward to seeing you in the next video. Don't forget to subscribe, and have a fantastic day. Now, back to the article. Artificial intelligence potential gain at appealing costs could make market-beating returns for the following 7 years. Each innovation has a scope of results. Some, similar to the web, influence the world. Others, similar to 3D printing, are not really, essentially not yet. Artificial intelligence, simulated intelligence, has gotten a great deal of publicity. However, it appears to have the sponsorship of organizations and legislatures expected to have an enormous effect throughout the next few years. Artificial intelligence could make phenomenal new organizations over the long haul. However, a small bunch of artificial intelligence stocks are as of now dashing to the front. These 4 stocks underneath have as of now profited from a simulated intelligence lift yet exchange at extraordinary costs. Focus on what their valuation is versus their normal development. On the off chance that you can separate the cost to income (PE) proportion by the normal development rate and get under 1.5, the stock could be a sensible cost for the development you could get. This number, called the stake proportion, is a Peter Lynch number 1. Development discounted is a phenomenal recipe for absolute returns, so these could be the top-performing simulated intelligence stocks by 2030. This is the thing you want to be aware of. 1. Palantir Innovations. Stock symbol, PLTR. The U.S. government will be huge in calculating computer-based intelligence because the innovation could turn into an upper hand against the world's different nations. Palantir Innovations, PLTR 1.49%, is particularly situated as a product organization with profound government ties. The U.S. government is over a portion of Palantir's income. Its product stages resemble a working framework for associations, utilizing computerized reasoning and AI to break down and use information. The organization as of late started posting a steady proper accounting rules, GAAP, benefit, and examiners accept that profit will keep compounding, requiring a yearly normal of 72% over the long haul. At only multiple times forward profit, that leaves a lot of space for speculation returns over the remainder of this long period. 2. Nvidia. Symbol NVDA. Artificial intelligence requires a huge registering ability to rapidly deal with immense measures of information. Chip organization Nvidia 2.44%, ventured into the influential position last year as organizations wildly started spending to construct these high-level PC frameworks. Nvidia's business and stock required off last year, and the organization's presently sitting on an expected 90% of the computer-based intelligence chip market. Normally, Nvidia could keep multiplying from artificial intelligence's development alone regardless of whether contenders snack away at Nvidia's predominance. Despite the stock duplicating in esteem over the last year, the organization's solid profit development viewpoint makes the stock entirely sensible on a forward premise. At the end of the day, development ought to convey shares higher throughout the next few years. 3. Meta Platforms. Symbol, Meta. What do you get when you join one of the world's most ruling plans of action with artificial intelligence potential gain? It very well may be online entertainment Goliath Meta stages, Meta 1.19%, proprietor of Facebook, Instagram, and WhatsApp. Meta makes billions of dollars by publicizing to its 3.96 billion month-to-month application clients. Even moreover, youthful chief and prime supporter Mark Zuckerberg has inclined intensely into building simulated intelligence innovation that upgrades its publicizing business and is a long-haul special case. The organization hit some hindrances in 2022 yet has since revitalized more than 300% from its lows. Surprisingly, the organization's 20% assessed long-haul development rate makes its ongoing valuation ostensibly it can foresee long-haul financial backers. Given its strength in online entertainment, financial backers can hold Meta as a computer-based intelligence stock with a higher floor than most. 4. Advanced Micro Devices, AMD. Symbol, AMD. While you shouldn't expect that Nvidia will drop out of the simulated intelligence chip lead, there is a sensible opportunity that computer-based intelligence will be huge to such an extent that more than one chip organization can win. High-level miniature gadgets, AMD 1.66%, may be the following smartest option after Nvidia. The organization hasn't yet felt the development spray that Nvidia has. However, it uncovered an impending man-made intelligence chip line in late 2023 that it says will outflank Nvidia's well-known H100 series. AMD might need to show off its abilities by showing the deals to back up its cases, yet investigators appear to be hopeful about the organization's more extensive possibilities. Long-haul development gauges are more than 35%, which makes the stock's forward cost-to-income, PE, a proportion of 44, a strong cost to pay for that development. This stock might convey more gamble. However, the potential gain could shock financial backers if AMD can gain more headway in taking a man-made intelligence chip piece of the pie than Wall Street is giving it credit for. What's more, assessment, AMD has a strong way to fast development if it can move beyond Nvidia and Intel. The chip creator's most recent profit shows both commitment and the difficulties ahead. The profit hurricane for innovation and silicon organizations presently has wrapped Progressed Miniature Gadgets Incorporated AMD 2.5% after it detailed final quarter and entire year 2023 outcomes. I realize that numerous different stories and experts will jump into the dollars more profoundly than I. Yet it merits relating several of the central issues that I believe apply to how we take a gander at the capacity of AMD to support its force into 2024. From a final quarter 2023 point of view, taking a gander at year-on-year correlations with 2022 that were quite terrible for AMD, in the chip market overall, income was up 10%. The net benefit was up 10%, the edge was level, and working pay bounced 12% to more than $1.4 billion. Boring into AMD's key specialty units, the server farm bunch saw a 38% expansion in income and a half expansion in working pay. The client fragment that records the organization's chips for customer work areas and PCs saw an income increment of 62% and a working pay climb of 136%. Without precedent in any significant way, the server farm business is currently the biggest part of AMD's income. The complete 2023 outcomes, contrasted with 2022, are a piece deceiving in light of exactly how terrible the principal half of last year was. The best news for financial backers during the income call came from Chief Lisa Su when she reported AMD was raising income projections for its MI300 group of simulated intelligence gas pedals for the server farm section to $3.5 billion from $2 billion, an enormous 75% leap. This depends on surprisingly good inclining of item approval with clients and the subsequent expanded request as a result of it. I wouldn't be astonished to see that the $3.5 billion number that AMD is advancing for 2024 be an undercall. Su referenced in the question and answer that the organization had developed the store network to transport, quote, considerably more, unquote, than the $3.5 billion imprint, assuming interest is there. AMD keeps on promoting a projected market size of $400 billion for man-made intelligence gas pedals by 2027. However, subtleties on this projection are still a piece light. If the organization can figure out how to catch only 5% of that market by 2027, financial backers are taking a gander at an income focus of $20 billion, with a lofty bend up from 2024 to hit that. Financial backers are logically addressing whether the organization can support this sort of development and energy. Does it have the aptitude to contend with any semblance of Nvidia 2.01%, and hold off the ascent of chip new businesses and, surprisingly, in-house silicon development at cloud administration organizations? Su has fabricated an execution machine at AMD, giving clients like Microsoft, MSFT, 1.06%, and Lenovo 992, 2.45% the certainty to commit their product offerings and prospects to AMD's guide, something that quite a while back would have been unbelievable. At the point when the chief referenced nonchalantly on the income call that AMD is accelerating its artificial intelligence chip item discharge plan, like how Nvidia declared a quicker rhythm of new items last year, few ought to be uncertain that she can get it going. On the client side of things, what's to come is a smidgen more dim. AMD as of late declared the Ryzen 8000 series of chips for PCs incorporate a new, quicker artificial intelligence gas pedal that makes it one of a few new computer processors coming to showcase for the computer-based intelligence PC. In the not-so-distant future, AMD will deliver its Strix group of chips, which vows to further develop artificial intelligence execution by a variable of 3, while likewise presenting another central processor engineering named Harmony 5. While the item family that AMD has available for 2024 in the purchaser space appears to be a lead execution and proposition convincing computer-based intelligence and illustrations, the market development in the PC space is projected to be a lot lower than for the server farm. Even though most experts see a supercycle coming in the PC space, because of the extension of convincing artificial intelligence use cases to drive customers to purchase new frameworks, AMD is supporting a bit here. Gambles for AMD are greater in the client space than the server farm section, in my view. For big business and cloud specialist co-ops incorporating simulated intelligence gas pedals and new chips, the capacity to fabricate and modify programming for AMD items is a little piece of the general expense of carrying on with work. Assuming AMD is simply stressed over 10 to 20 critical applications for its MI300 group of simulated intelligence GPUs, it can concentrate on designing endeavors. Yet, in the purchaser space, where man-made intelligence applications and responsibilities will number in the handfuls or even hundreds, Intel Inc. 1.33% has a huge programming improvement group that it can use that AMD doesn't. Accordingly, artificial intelligence programming might be more viable with Intel artificial intelligence chips sooner than AMD's. One more piece of the gamble is that Intel's most recent chips, similar to its Center Ultra family, are great. And in a market where OEMs and shoppers aren't starving for new processors, just like the case in the server farm, then, at that point, AMD should contend all the more straightforwardly on its offer. Those Intel Center Ultra chips will more often than not target more costly frameworks, so AMD will just be preferable over Intel's last-stage items to win. I hope to see unit and income share increments for AMD in the client space through 2024. The organization has kept on developing its impression comparative with Intel in the PC space throughout recent years, and like the server farm business, AMD benefits from its record of proceeding with execution. As AMD edges up from a 15% piece of the pie in 2022 to practically 20% in 2023 for client chips, it appears to be unavoidable that it will want to proceed with that development to as much as 30% quite expeditiously. Again, thank you so much for tuning into today's video. If you found the content helpful and insightful, don't forget to hit that subscribe button and turn on the notification bell so you never miss out on our latest finance tips and insights. Your support means the world to us, and we're thrilled to have you as part of the Finance Savvy community. By subscribing, you not only stay updated with our upcoming videos, but also contribute to the growth of our channel. If you have any questions, comments, or suggestions for future topics, feel free to drop them in the comment section below. We love hearing from our viewers. Thanks again for being with us. Stay financially savvy, and we look forward to seeing you in the next video. Don't forget to subscribe, and have a fantastic day.